I'm joined today by Pavel Spirin to talk about how scope markets navigated this period of turbulence, not just from an operational resilience point of view, but also from a client trust point of view.
Thank you for having me. Glad to be here.
So, when gold markets become exceptionally volatile, what was the first operational signal that this was going to be a real test?
So I think, naturally, if we ask the wider market participants, people would look at the price, or some people would also look at the exchange volume fluctuations. For us, the primary signal is essentially to see what's going on in the wider liquidity world. So our partners, our liquidity venues, liquidity providers, that we work with, essentially just look at how does the price dispersion looks like, what's the quality of quotes that are coming through. So these are the kind of, this is essentially the primary signal for us during during the time that happened.
And gold's at a historic high, close to its historic high. That's not new news, but something far rarer than that, an outage at a major market participant like the CME. How did scope markets respond to that? What action did you have to take during this time?
Specifically when it comes to gold and the gold market, we continued operating, and I guess this is thanks to essentially our diversified network of liquidity venues that we work with, because not everything is based off the the sort of like the market quotes that we get from comics an exchange in this example. So essentially, yes, we were able to not without its own disruption, but we were able to continue operating without having to shut the market down. But of course, like the quality of the liquidity, and then also the the availability, that was affected globally. But yeah, like one of the things, and I'm being quite modest about it right now, but like one of the things that we are proud of is the fact that we didn't have to shut our doors, and ultimately the customers. And I guess the reason I'm saying that is because there's always two sides of the story. However, like a lot of people have to understand, doing these events, a lot of the venues had to shut their doors completely. So essentially, you just weren't able to access the market. So we were able to continue providing that continuity. But as it is a real market, and ultimately it's a supply and demand dynamic. Yeah, the quality of that service gets affected because of the underlying market and its behavior, essentially.
So we all have our plans, we all have our PowerPoint slides, but how does it actually work in practical terms when you get the phone call at 3 o'clock in the morning that a major market participant has gone down? Is that then discretion? Is it people immediately dialing in and working on things, or are there systematic things in place to navigate through these times?
Well, hopefully, like in the ideal world, you continue sleeping because you have redundancy systems in place and they kick in. Unfortunately, most of us don't live in that world. So yes, you get a call, you get up, and then essentially you discuss the sort of like what's the plan now, and like what can you deploy in terms of contingency systems. A lot of it, there's systems, and then there's technology, but there's also people and sort of the processes. So essentially, you kind of have to very quickly figure out who plays the most crucial role. And there will always be trade-offs, but you have to work out the approach relatively quickly and then kind of put that in action. You need to assemble a team, and in our case, that's basically what happened. You assemble your core team, and then you figure out, how to address this issue. Actually, this brings a very interesting point, and this is a question, I'd like to ask yourself. Obviously, as a CTO at Rostro Group, you oversee a lot of the kind of technology as a roadmap, and then just in general kind of like looking at systems designs and so on. So obviously, like not just sort of like stepping outside of like just kind of Rostro Group, but then looking broader, like what is your kind of take on sort of like in situations like this, like what role does technology play, and what is your, I guess, kind of vision and view for technology for the events like that? Because obviously market is becoming there's a whole loads of things to talk about why we're seeing the behavior, but I can imagine that in the future we're going to be we're going to be seeing these types of events more often.
ultimately, a failure like this, it is a black swan event, but having your plan, your preparation is one thing, but having practiced it and having the baked-in process and the technology to know exactly what you're going to do, because these things don't happen at 9 o'clock on a Monday morning when everyone's in the office. They happen out of hours. So having that plan in place and understanding that one of the things that will erode client trust the most is inability to execute, inability to see a price. But there's it goes much deeper than that. We need to think about how we process withdrawals, how we make sure that stress that we're feeling doesn't get passed on to the end customers. It brings on to a good point around withdrawals. A lot of brokers will slow down withdrawals at times like this. Clients will place withdrawals because of that perceived lack of trust with their broker. How do you handle that? Is that something that you've experienced? What's the approach?
Well, I personally view I don't view withdrawals as a risk lever. So I think as a brokerage firm, we shouldn't be utilizing that as a risk management technique. So ultimately, it's natural behavior, like when things like that happen, and especially like in the age of social media, it's very easy. You go to a subreddit, and all sorts of scary stories sometimes being shared, and some of it are true, but some of it are exaggerated, and obviously that it's very easy to create a lot of panic. So the way kind of like I'd like to see us built is like when you are operating through the kind of like the good and the bad times. So when you are reliable and your core service, pricing, execution, depth of liquidity stays as close to normality or ideally at normal level, during the sort of like the shock events, then in a way there is no need to kind of go back and continuously reassure the market, because the clients see, like if your service is reliable and continues, you can continue operating without having to kind of be fearful. So ultimately, I think it's an element of trust with the client that is built over time. And, like we kind of prefer to be sometimes quieter about it, like let the facts speak, essentially. Like let us sort of like build the experience that we believe, like the customers are expecting of us. And essentially during these events, let's put them on, essentially to the test.
I think it's a very important point to have passed a test in the real world, be it a 1 in a million event. But gold volatility is not new news. There'll be future periods of high volatility, market shocks. How do we plan around that? Do you see this operational resilience, this system that you're building, is it part of the cost? Is this just what it takes to build a successful brokerage, or is this a true genuine growth driver for you?
I think it's a genuine growth driver. I think it can be seen as a cost, and oftentimes it is cost in the periods when the markets are relatively quiet. However, I think like as we're experiencing, the volatility is generally increasing. The world economies are, kind of like in a semi-state of shock, like all the time, or one step away from them, especially in the sort of like the modern era of politics in some regions, right? So I kind of expect the volatility to just be elevated in general. And I think, during the times like these, when you have a major exchange outage, or you have, basically people panicking and, queuing up to buy silver, I think this is kind of like where that resilience really sort of like, without you going and shouting about it, but it's just kind of like that silent signal. It's just a fact, like that you stay open, you continue to honor everything that, you've said to your clients. So it's just a great way to demonstrate that we are a reliable service. And I think you don't really need to do anything else for the clients to notice. And then eventually, obviously, that helps kind of your firm grow, versus others.
And in terms of what you say to clients, what do you communicate to clients at times like this? Is less is more? Do you have a very proactive approach? What feedback have you had from clients around how we've communicated and how we've advised them to handle their risk?
Well, we prefer to lead with clarity. So it's facts over noise. So if there are things that we believe, are going to be, if our clients, for example, are going to be affected, or there are systems that we believe may malfunction, like we prefer to communicate that early if we know about it in advance. Or if we don't, then, like we try and, basically issue communications as soon as possible. What we don't do, we don't add to the noise. We don't go to the market to reassure the market about, we're gonna stay in business, or like think like, okay, this is maybe extreme example, but like we don't do that, because like, why do you have to? Like, if you're confident in your systems, if you're confident in your approach, you're confident in your team and your people, then let the client experience speak for itself. So that's sort of like where we try to be kind of pointed and like communicate where we need to communicate without kind of like sort of over communication or the adding to the noise.
So we've had this extreme period of volatility. Gold volatility is fairly old news now, but we're going to have a lot of future periods, future market shocks. Who knows whether we'll have another outage of a key market participant like the CME, but we've planned for that, and we have the systems in place for that. But as you've said, a lot of these things, the people, the processes, the systems, the real world battle hardened practice, these things are silent. They're not necessarily visible to customers. But what are some key things that customers can look for in their broker to ensure that they are going to continue to provide the service when markets become unpredictable?
So I think there's, as you said, there's some information is publicly available, other information is not publicly available. But I would say there's a number of things. I mean, the number one, essentially, how is the brokerage firm doing the events of stress? Like, what is the communication that goes out? Like, what are the I guess changes to the operational setup? Like, are there changes? I think sort of like kind of like looking at that, even if, let's say, you're not transacting with a particular brokerage, like usually like things like that reveal some gaps, or vice versa reveals strength. So it's just being abreast of that is quite important. And then on a kind of general note is like the counterparty risk is the largest risk that a client is facing, like in any sort of like market transaction. So it's just kind of like establishing who exactly are you kind of working with, like, is the broker transparent about, its communications with the clients, its operations, operating model, key management personnel, the size of the brokerage. That's kind of like what you want to essentially establish. Is this a reliable counterparty I'm working with, and what do they do during events of stress?